Okay, zone 5, please.
Good afternoon, Mr. Buffett and Mr. Munger. My name is Grant Morgan. I'm here from New York City. Earlier you had acknowledged that it is a more difficult investment and business environment today than it was when you first started out. My question is, if you were starting out again today in your early 30s, what would you do differently or the same in today's environment to replicate your success? In short, Mr. Buffett, how can I make $30 billion?
Start young. Charlie's always said that the big thing about it is we started building this little snowball on top of a very long hill. So we started at a very early age in rolling the snowball down. And of course, the snowball, the nature of compound interest is it behaves like a snowball of sticky snow. And the trick is to have a very long hill, which means either starting very young or living to be very old. I would do it exactly the same way if I were doing it in the investment world. I mean, if I were getting out of school today and I had $10,000 to invest, I'd start with the A's. I would start going right through companies, and I probably would focus on smaller companies because I would be working with smaller sums, and there's more chance that something is overlooked in that arena. And as Charlie has said earlier, it won't be like doing that in 1951 when you could leaf through and find all kinds of things that just leapt off the page at you. But that's the only way to do it. I mean, you have to buy businesses or little pieces of businesses called stocks, and you have to buy them at attractive prices, and you have to buy them you have to buy into good businesses. And that advice will be the same 100 years from now in terms of investing. That's what it's all about. And you can't expect anybody else to do it for you. I mean, people will not tell you about wonderful little investments. It's not the way the investment business is set up. When I first visited GEICO in January of 1951, and that rest of that year, I subsequently went down to Blythe and Company, and actually to one other firm that was a leading Geyer and Company, that was a leading analyst in insurance. And I thought I'd discovered this wonderful thing, and I'd see what these great investment houses that specialized in insurance stocks said, and they said I didn't know what I was talking about. It wasn't of any interest to them. You've got to follow your own. You've got to learn what you know and what you don't know, and within the arena of what you know, you have to pursue it very vigorously and act on it when you find it. And you can't look around for people to agree with you. You can't look around for people to even know what you're talking about. You have to think for yourself. And if you do, you'll find things. Charlie?
Yeah, the hard part of the process for most people is the first $100,000. If you have a standing start at zero, getting together $100,000 is a long struggle for most people. And I would argue that the people who get there relatively quickly are helped if they're passionate about being rational, very eager and opportunistic, and steadily underspend their income grossly. I think those three factors are very helpful.
Oh, inherited wealth and children.
Kids inheriting money.
Yeah, well, we have a minority viewpoint down here in the front row. I think my views on that subject changed when I was about 18. Until that point, I thought it would have been a great idea. No, I am quite a believer in a meritocracy, and I think a part of that is not having people start way ahead of other people in life based on whether they were lucky enough to come from the right womb or not. So I've never been big on the idea that either society benefited or in many cases the kids, although I think that's much more problematic, but by the fact that great transfers of wealth will go from one generation to another. I would rather see the degree of talent possessed by individuals determine the resources they command in this world and their ability to influence other people's lives and command the labor of other people and all of that than any divine right of the womb. So it's and Charlie has a somewhat different view on that.
Yeah, I am a little more willing to let the world take the succeeding generations down. It's
He believes in
I don't
passing
think
it.
they need much help.
Charlie believes in passing it along as long as you're sure they're going to blow it. Okay, so go ahead.
If you stop to think, Warren, of the great fortunes of yore, if you go back to 1900, 1870, and name me the people that have vast power because they are in the fourth generation in that family. Some of them are living awfully well, but they are not running the world.
I would say the Rockefeller family had considerably more influence than if their name had been, just plain Rock.
Well, I think that's true, but you're picking probably the strongest single family of the piece. And now that it's dispersed among 60 or 70 or 80 Rockefeller, I think it's true there were 4 or 5 brothers there that had an unusual share of worldly influence. I must say in that case, I think they handled it very well.
Good afternoon and thank you. My name is Paul Worth. I'm from Wichita, Kansas, and my question is as follows. For the consumer franchise companies that Berkshire owns, Coca-Cola and Gillette in particular, in which emerging markets do you see the greatest 10-year potential for unit sales growth, and what economic, political, or social changes are precipitating that growth? Secondly, do you believe that the U.S. market cap as a percent of the world's at 53% is near its zenith, and which countries do you believe will likely show the greatest percent growth in total market cap?
Well, I wish I had the answers. The first question, though, obviously, when you're dealing with something like Coke is raw numbers. I mean, there's huge potential in a country, with the largest country in the world, in China, where the per capita consumption is very low, but is growing very fast. So it's very easy for me to predict and probably be right, absent some tremendous upheaval or some real surprise, that China would be the fastest growth market among countries of any size in the world for Coke from this level. But that's based on the fact that you just got a huge number of people that clearly like the product, that are starting from a very low base, and where a lot more bottling infrastructure is going to be needed, but which will be supplied to facilitate that growth. With Gillette, it's a little different. And people are already shaving. What you do is you upgrade the shaving experience that they have. So you have great differences in the quality of the blades available, shaving systems when you get into the more advanced ones, and they trade up and they get a much more enjoyable shaving experience. They get better shaves than was the case when they were forced to rely on the lowest priced product. But both of those companies have tremendous opportunities as the prosperity around the world, as the standard of living grows, and there's just no doubt in my mind that in the blade and razor business for Gillette, which is only a third of their business, but I would almost guarantee you that 10 or 20 years from now, both of those companies will be doing a lot more business in those areas I named than currently. And we don't fine tune it a lot more than that. I mean, I do not sit and try and work out country by country what's going to happen with a Gillette or Coke. It would be a waste of time. I wouldn't know the answer anyway. But I'm pretty sure of the conclusion that both of them will prosper a great deal, and I would hate to be competing with either one of them here or anywhere else in the world. I mean, they have the winning hand. Charlie?
Well, I'd agree with everything you said, and I'd like to add that if I knew for sure that the United States share of worldwide market capitalization was going to go from 53% down to 40%, I wouldn't know how to make money out of that insight by running around buying foreign securities.
Yeah, we just don't operate on that basis. And I mean, a few years ago, emerging markets were all the rage, and every institution in the country was getting promoted by somebody who said, I'm going to run an emerging markets fund, and they felt they had to participate in it, and their advisors told them they had to participate. We regard that all as nonsense. In the end, you just have to think for yourself about what you know and what you don't know, and go where that leads you. And you don't do it by buying into things with names on them, or sectors, or country funds, or that stuff. That's merchandise that's designed to sell to people, and it usually is sold to people at the wrong time.
Yeah. Our game is to find a few intelligent things to do. It's not to stay up on every damn thing that's going on in the whole world.
Good afternoon. Wes Thurman from Stanford, California. You mentioned earlier about the power of the brands on the internet, and I really can't think of a better brand, at least in my name, as the Berkshire Hathaway brand. And I guess going forward, have you thought about ways to use the Berkshire Hathaway name, further on the internet to capitalize on the reputation you've built over the past decades? And,
yeah, I think that's a very good point, and it is something that could be of real value. It's already probably of some value to us with the brands that we're associated with. I mean, I do think that Executive Jet, or the NetJets program, associated with Berkshire Hathaway, that Borsheim's associated with Berkshire Hathaway, the Berkshire Hathaway Life associated with Berkshire Hathaway. I think those brands are enhanced by the association with Berkshire, as some of other brands would be. But I think that's got a long way to go. I think you're dead right on that the internet reinforces the necessity for trust in dealing with people. I mean, you're getting further and further removed from the face-to-face dealing where you can go back to the store the next day, or look at the person who sold it to you the next day, and get an adjustment or something of the sort. You're really having to place more and more trust in somebody you're never going to see. And I think you're right that Berkshire Hathaway, if it behaves itself properly, can get a reputation for trust that will be far greater than that possessed by the average company, and that when we properly associate that with some of our brands, that those brands will be enhanced by the association. So I've thought a lot about what you're talking about there, and so have our managers, and it's something that we intend to capitalize on in the future. It's rather interesting. I mean, if you look at the companies that do business with people where there's no face-to-face interaction, either with the company itself or some intermediary like a retailer or anything of the sort. I mean, you've got Dell Computer, and now you have Amazon.com, but Geico is doing business with now 3.7 million policyholders, and it'll do, before the year is out, it'll be close to 4.5 million, and probably 4 billion, 8 or so of business with people that have never met anyone from Geico. They've talked to someone on the phone. But we are one of the largest companies in the United States in terms of doing business on a direct-to-consumer basis. We're doing it with people who on average are paying us $1,200 a year or thereabouts for a promise. So we have a connection that people that talk about the Amazons of the world, where people are buying X dollars worth of books, we have a much more direct connection with people who tend to renew with us year after year. That is based on trust. I mean, it's not based on the neighbor next door who they can go to if they have a problem. It's based on the fact they trust this company that's back in the District of Columbia, Washington, to perform in the future. And that's a huge asset, and it's growing daily. I mean, we are adding policyholders every day who who are signing up with us who have never met anybody from the company. And that already, I mean, it's a very big asset. It will be many times bigger, in my view, 10 years from now. The Berkshire Hathaway umbrella that gets involved in one company after another like that people trust. I mean, we can be in an awful lot of homes over the years, and as more and more business becomes done on an indirect basis or a direct basis with the consumer, the power of that, in my view, should grow, and we just have to be very smart about how we maximize that growth. Charlie?
Nothing to add.
Okay. Zone 1.